Well, if you are wondering what to expect from the Bank of Canada rate hike, federal housing plan announcements, today we are going to answer a lot of those questions. I am definitely not the smartest guy in the room, so I brought a whole bunch of people with me, and I will give you an intro to who these people are for context. But the topics we are going to cover are the Bank of Canada rate hike, the proposed rate hike in June that they're already talking about, and how is this going to affect buying, selling, investing decisions. We're going to talk about the Fed plan. I'm going to actually pull up the Liberal plan and go through the different components of it. It's going to be a pile of fun. Let's get right into it. I'm going to roundtable all of the people that you see on the screen and explain who they are for context, because what we are not are a bunch of real estate agents that are just going to tell you that now is the best time to buy or sell your property. That's not the type of people you have here. These are actual practitioners that are doing enough business that they don't necessarily care if you buy or list with them. They're going to tell you how they're navigating in today's landscape. And fun fact, real estate is just like the weather. When it is really hot outside and everybody's complaining about it, then it turns cold. The real estate market's very similar. We are going to be doing business regardless of if it's a buyer, sellers, or balanced market. The strategies are what matter in a very, very big way. So I'm going to go through the list and explain why they're here. Mike Heddle to my right is the real estate surgeon operating out of Hamilton. I have spent hundreds of hours masterminding with Mike off channel. You would deem us to be competitors because we're both in Southwestern Ontario, but I respect how much he puts into his craft. He's also the AE Lepgae Agent of the Year, which is a huge earmark. I see Jazz and Simeon are just clapping. I mean, that speaks to the character of who Mike is as a person. That's a big deal. Phil Millar to his right is the legal phoenix. He owns Millar Law. He used to jump out of helicopters, and he is like the opposite of what you would think a lawyer is. I have seen him personally turn away clients because the best solution wasn't necessarily going to court, and he fixes problems before they become problems. He's also one of the only lawyers you can get on the phone and will actually pick up the phone and call the other lawyer and solve the issue. I absolutely love how he practices law. He is international. He is a little bit of a man of mystery, but definitely somebody you want to get to know, so go follow him. I see Simos there, the smiley pie. He is with the REC team, commercial real estate wizard, operates out of Don Mills at the REC Center, and to his right is his partner, Jazz Takhar. They are brothers. I didn't know I had an Indian and a Greek brother, but I definitely do. Those guys have been long-term friends of mine. Jazz actually called to recruit me for one of the largest investment groups in North America. I thought it was a scam. My wife told me to go meet him, and it ended up being one of the best relationships of all time. Jazz also produces a ton of content and has Fitigu from the ground up, the media group where they're teaching you how to create content. Really, really good, dynamic people. They're good examples of the character of the people that are on this panel. They are giving away all of the best secrets. Literally, they wrote a book on how you can sell your house yourself. So these are the types of people that are going to be talking today. Lindsay Gowan is an interesting story as well. She's an investor. She's a world traveler. She's been to Costa Rica. She just got back from Portugal. Pretty sure she's going to tell me she's going somewhere else soon. But she was an investor first. Background in design. She went to school at Humber College for design, worked for a cabinet maker, worked in a flooring company. I told her to get her real estate license because I wanted a designer on the team. She showed up at my door 8 months later. I said, got my license. I forgot I offered her a job. I hired her, and she ended up being one of the smartest people. Runs my investment division with me at Prime. Ray Ellen runs the #1 news show on the planet when it comes to real estate. The Bearded Men of Real Estate was what it used to be called. I'll let him kind of pitch it a little bit later, but very insightful. He's in Arkansas, runs multiple offices, owner of Pixel Properties. A good human being, loves baking, loves CrossFit, loves his Jeep, and I have a Bronco, so I know there's a bit of a dynamic there where we're kind of like brothers, but we got to get on the off-road trails and figure that out. But just, again, very insightful, educated. He's paying attention to the big things that are happening. I brought him on specifically because I want his opinions as to what's happening in the Canadian market and why it's important as consumers to be aware that it doesn't necessarily matter if you're an agent in Canada. The same principles do apply. And last but not least, Mandy Leishman, Mortgage Mandy, the mortgage expert, very near and dear to our hearts. She was actually my wife's wedding party, longtime friends. I've known Mandy for 20 years. She earned our business. She works incredibly hard, very accessible. And somebody like her is very insightful to have because she literally spends her time going to meet with top level bank managers, going to those boring meetings that nobody wants to go to, so that when I call her and I need answers as to what's happening, she has those answers. Somebody from the mortgage perspective. So little balance group we have here, but let's get right into it. We've got about 45 minutes here and we got a lot of knowledge. So I want to extract as much as possible. first, I guess let's talk rate hike. So Mandy, why don't we go to you first, and then I'm going to toss it over to Ray. What does a rate hike mean for the consumers today, and what are you guys talking about in the back channels of the mortgage industry right now?
Yeah, let's start it off with rates. So we're all very aware that the prime rate is driven by the overnight rate set by the Bank of Canada, and then the overnight rate is the rate at which the banks lend at. So we saw two significant rates in the last little while. Just a little bit of history. Back in 1991, I'll give you history from 1990 to 2009, and then we'll take it to our current rate. Back in 1991, we had an all-time high in February of 16%. But then in 2009, we saw a decrease down to 0.25%. So the Bank of Canada right now has raised its rates on April 13th by 50 basis points. That's a percent higher. We were forewarned about this happening. Rates are going to continue to be on the rise for the next little while, just due to the inflation all across Canada. Now, the predictions that we're also seeing is that by 2024, things are going to regulate themselves, and we're going to see an all-time low of rates hovering at about 2%. There's no guarantee. We don't have a crystal ball, but yeah, we had to raise the rates just to keep up with the demand. Specifically during the pandemic, there was a shortage of land, shortage of build, shortage of supply, shortage of workers, for that fact. There's an inflation with everything. As you can see, you go to the gas station, you go and buy groceries, everything's just a little bit more expensive. So the purpose of this rate hike was also to try and slow down the market. Now, I'll flip this one over to you guys, Justin and Lindsay. Sure. Have you seen any slowdowns in real estate with the rate hikes?
Well, Mike and I were talking just before everybody got on about how, like when you have a news cycle like it is, and I know Phil can speak to this later, the news cycle really thrives on clickbait, right? So, I mean, you go through the Will Smith headlines and they go through Ukraine and they go through everything else. After about 4 weeks, they're like, oh, look, housing. And every news outlet starts hammering these headlines. Consumers tend to get a little wary and they're like, oh, is the market going to crash, right? So what we do as professionals is we look back and we look at the statistics. I'll share this super quick just so everybody can kind of see what I'm looking at. And I look at the number of new listings historically since 2017, and you see the cycle: January, December, May, December, May, December. So I'm like, last year when I was looking at the forecasting, I'm like, well, guess what's going to happen in May, right? December is going to be ultra low. It's going to be mayhem. And then March and May is going to go up. And it actually did. But at the same time, like, we haven't seen the amount of rate hikes that they've been forecasting. And I think the inflation piece is bound to happen, but I think the rates at what we're talking about are still at historical lows in terms of where it's going to be. So Ray, what are your thoughts in terms of when you see rates going up? Because I think the American-Canadian conversation with rates, like, we do track increases very closely because we're similar markets, right?
Yeah, I mean, similar stuff is happening here where the Fed is continuing to raise the rates to make it less attractive for them to give the money to the consumer, more attractive for the banks to loan money to each other. So essentially, it's just making money more expensive, which is making the housing more expensive by default, right? So whenever you had someone last year that was maybe pre-approved for 500,000, maybe this year they're going to be pre-approved for 475 or 450. So it is going to lower the amount of competition at some price points. But all the economists that I've been following so far have said, although there's going to be a change in some buyers' habits, overall, the rate hike is not going to be enough to quench, I guess you could say, the demand. It's not going to stop the buyers from buying, and you're going to continue to have less supply and more buyers in the market. And if I'm not mistaken, didn't Canadian home prices double or something in the last year? Like, it's overall like 50%. So, I mean, I think the problem being the house price, or the problem being inventory situation, that's not going to change because of a change in rates. But I think you'll have, instead of 20 offers, maybe you only have 10, but you still have a problem of more people wanting the house than can buy it.
Well, we noticed a weekly shift. So back to your question, Mandy, yes. amongst realtors, we've been talking that, you're not getting 20 showings unless you're pricing 200 under, and the pricing is a marketing tool. It's not what the sellers actually want to accept. It's, if I'm listing Phil's house as a seller, he's going to look at the data and say, well, what did the last 3 houses sell for? They sold for this. Where did they price to generate the activity? How many offers did they have? Okay, that plan makes sense to me. That's where, and we'll get into this later, the liberals are now talking about doing auctions versus blind bidding, and we'll get into the dynamics of that. I'm going to go to Lindsay really quick and then Phil, because I want Phil's opinion on the rate hike perception from the legal and consumer perspective. But Lindsay, have you noticed a drop in the investment pool as well in terms of, sellers' expectations or buyers' willingness to go buy properties?
Yes, definitely. It's interesting to see where some investors have laid, saying that they're waiting for more of a stable market, and then we're finally here, and they're like, "Oh well, I think the market's going to crash," and because they're following the headlines as well. And I think that it brings out a whole bunch of investors that are really our ideal clients at the end of the day, and they're really ready to purchase those ones. So it kind of helps us help them more with interest rates rising. And I know a lot of investors are running their numbers at much higher interest rates already because they don't want to be caught swimming naked once that wave goes out. So our investors that are really dialed in, this isn't going to affect them much. It is only going to help them purchase because we are seeing less offers on offer date. We're seeing less competition, which really helps our buyers as investors. With some of our sellers, expectations do need to be set a little bit better just before we enter into selling, and they're expecting those 50 plus showings. They're expecting that really high over asking price, and we can get there with the right pricing strategy, but that all needs to be adjusted with the interest rates climbing.
We are seeing that on a weekly basis. Like our strategy, if I gave, again, Phil pricing last week, it's going to change next week and the week after. You can't just say, well, this is what it's going to be. You have to be in the actual trenches. Nobody better to be in the trenches than a Phil Millar. Phil, what are your thoughts in terms of the general, well, I guess your perspective as a whole, because you're a pretty insightful dude. So I'd love your high level on what you think is happening with mortgage rate increases and consumer. You are on mute, my friend. Bottom left-hand corner, hit that little unmute button. I'm also going to drop people's Instagram links in the chat. If people want to click on that and go follow and DM these people, by all means, go ahead. Go ahead, Phil.
Perfect. When it comes to these real estate trends, I like to try to adopt Ray Dalio's approach. I don't know if you guys are familiar with his book, Principles. Humans are very bad at looking at time period beyond 6 months to a year. Really, there's decade-long trends going on here. So it makes it very difficult for a home buyer to make a decision as to when to get into the market, because there's always a fear that you're going to get caught with an overpriced house. But when you're looking at it in 6 months trends, it's hard to decide whether or not it's the right decision, because the trend might be a decade-long trend. There might be an international movement towards investment dollars coming into a market, which changes what happened in the past. So the Trudeau government is creating policies right now to help win the next election. They know that the 20% are the youth. They need to help the youth get their first home. So they're doing whatever they can to the market to try and get new home buyers in. The ban on foreign investment, I think, is a really interesting policy that you're going to have to see some innovative lawyers try and help some of those dollars come in other ways. But it's crystal balling. But my mentor, John Drake, who's a billionaire and who's been in this market for a while, says, always buy in an upward trend. Don't try to buy bargains. But in real estate, it's very hard. It's very hard to forecast where we're going.
Yeah, I'm going to go over to Jazz and then Heddle. I mean, Jazz, you always say time in the market, not timing the market. And we've seen so many people fail waiting for deals. And then the market corrects and people are like, oh no, the market's crashing. I'm not going to buy anything now. It's like, what? Okay. So give your perspective on this.
Yeah, I mean, first and foremost, Justin, thanks. I always wanted to be on Hollywood Squares, so I feel like I'm doing that right amazing. Now. So I also know how tough it is to put a panel like this together. So kudos to you and the whole team, brother. Look, overall, I like a little reset like this, right? I can speak specifically to the Greater Toronto Area market. I mean, this nonsense of 25, 27% year over year growth was crazy. right? I mean, a lot of people obviously made a lot of money, but at the end of the day, I like this little reset where months of inventory are starting to increase now. We were in a year and a half of, I'm going to say, less than a week and a half of inventory. And for some of your newer investors and buyers, I mean, you drop us anywhere in the world, and the stat that we like to look at is months of inventory, because it gives us an indication of what type of market we're in, right? And so if you have a 0 to 3 months of inventory, you're in a seller's market. 3.5 to about 5.5 months of inventory, you're in a balanced market. And then anything above 5.5 months, you're in a buyer's market. And for that last year and a half, we were in 2 weeks. And I mean, sometimes like 4 hours of inventory in certain markets.
Meaning that if we didn't list another house in 2 weeks, there'd be no more houses for sale in all of the GTA or London or anywhere. That's insane when you think about it.
Yeah. Now also keep in mind the greater Toronto area probably has a little over 1,000 little micro markets. The Bay Street market's different than the Brampton market. The Brampton market being different than the Durham market. But now, like literally as of 2-3 days ago, we got our new stats, and we're seeing 3.5 weeks of inventory. I mean, still not anywhere near a balanced market, but we're just not as an intense seller's market that we've been in such a long time. So I like this little interest rate hike. I mean, do I want to see it jump 5-7 more times? Obviously not, because then that can put us into that R word that none of us really want to go through right now. But this slight jump right now, I mean, to think that it wasn't coming would be naive, right? And so for the people that are watching right now, as you're running your numbers, I hope that you weren't being very like you are actually being conservative, right? And so the best way to do that is run your numbers a little bit higher, right? And so, like I said, overall, I'm happy with the fact that the rates have gone up, because now it's going to give some opportunities for more people to actually get into the market. If you're looking at compelling opportunities, and I know Justin said that we're not going to be a bunch of real estate agents saying now is the time to buy, but I'm going to tell you, as an investor, first and foremost, myself and the good-looking Greek bald guy next to me have been partners for over 17 years. And we tell people all the time, like, look, you don't need to sell your property. You could refinance. But when there is compelling opportunities like now, because of the fact you're not going to have 57 offers on every single property, end users, the conversations have changed at home. It's now, honey, let's wait a little bit to see what happens in the marketplace. Investors can now jump in because you're not competing against end users. Because as an investor, to beat out an end user has been very, very tough in the last couple of maybe even half decade, because end users see that long term. To Phil's point, I mean, those end users, even though they have a tough time, looking past 6 months, at least they start to see the kids in the backyard for the next 10 years, 12 years. As investors, it's all about numbers to us, right? And so now you might be able to see some opportunities in certain markets and then take advantage of tying up that property and doing your due diligence later, not trying to do your due diligence before actually tying up the property.
That's a great insight. And you were talking numbers. We're going to go to Mike Heddle next, because there's nobody I've met that analyzes numbers more surgically than him. But before you do that, make sure you hit a chat. You follow all of these speakers as they're speaking. I'm dropping their links in, send them a DM, connect with them. They are a resource for you. These people run their actual accounts and they're very insightful. My favorite thing that you said, Jazz, is those investors are putting the reps in the gym, right? A lot of savvy investors, they got liquid over the last years and they've been waiting for opportunities like this too. But you also talked about running numbers. When we run our pro formas, we put passive appreciation at like 3 to 5%. And that's how we look at it, saying like 27% isn't normal. There's no way I'm going to sell somebody a property saying, oh, for sure it's going to go up 27% last year. If your agent's doing that, go find another agent. Also, make sure you smash that subscription, that notification button, so you don't miss any future amazing guests like these. I've had pretty much everybody here on the podcast. If not, they are coming back on the podcast, and lots of love and respect for them. So we'll go to Heddle and then we'll go to Simos next. Heddle, what do you do from a numbers or analysis perspective? And I know you could wax poetic on this.
I'm going to kind of keep things under first principles here. So a few comments have been made. Real estate values have appreciated at 30%. Somebody talked about gas prices, like oil's up about 50%. The Standard & Poor index is up about 30%. And what the feds are attempting to do here with this interest rate hike is to get inflation under control. I'm going to speak to what inflation is. It's the devaluation of our currency. And the primary reason that causes that is the printing or creation of money. So over the past couple of years, and this is happening certainly in Canada, I won't speak too much to the US, but my observation is that's what's taking place down there. When we have these bailout packages, or we need to fund COVID, there's two ways the government can create more money. They can either raise taxes, which they don't want to do. That's not very politically enticing. Most people kind of push back. Or they can print more money, and that's what's called increasing the money supply. And we've seen the money supply increase by about 8 to 9% each quarter over the last 2 years. I'm going to make this really simple for people. If we live in a small community of 7 of us, and we had $100, we would go spend that $100 within the economy. If all of a sudden we had another $100 increase into our economy, everything would raise, almost not quite double. Housing prices might raise slightly higher than gas would for us. So we've seen strong devaluation of our currency, or inflation of most goods. And here's the good news. Real estate has fared very, very well to the devaluation of our currency. And if you're an investor, or if you're just a first-time buyer that wants to get into the market, I think we've witnessed in our lifetime the highest inflationary rates. One of those strongest tangible bricks and mortar assets that's fared well has been real estate. So I'm going to kind of take things high level, speak to, why should you get into home ownership as a buyer or a first-time buyer, or why should you possibly invest? Because I know a lot of our audience is investors. Why should you invest in a hard asset like real estate? Is that we've seen that it's fared quite strong against these high inflationary periods. And I see we're reporting our CPI around 5 or 6%. I believe that we're seeing inflation higher. If I was living in my parents' basement and my consumables were Doritos and Domino's Pizza and Netflix, sure, maybe my inflation was low. But if I need to buy energy or housing, like most of us do, I know that my dollar goes a lot less further today than it did just last year.
Yeah, let's talk inflation, Simos, Ray, and then we'll go. Oh, sorry, go ahead, Phil. I was actually going to go to you as well.
That point was astute, but because whenever we talk about inflation, I was thinking the price of an F-150 pickup truck versus the price of a standard house. I wonder how that ratio has fared, because I think that housing prices look expensive, but compared to an F-150, I think there's still a good deal when you look at the sticker price.
Well, my in-laws are in the Ford business, right? And I can tell you can't get trucks, and it's almost like bidding wars for trucks right now. It's bananas. Yeah. Go ahead, Jess.
No, I was just saying, Phil, I just picked one up, so I know the price tag on those things as well. And I also know how tough it was to get one. But Simos.
I got to remove you from the panel, Jazz. You didn't call Grogan. You're going to be in so much trouble. I'm just kidding. He's in Don Mills. Simos, inflation, and then we'll go to Ray.
Just like a couple of things, guys. First and foremost, to think that we have not been in a recession is also naive. We've been in an artificially cemented market for 2.5 years, where printing that much money, like when the government is printing, it's one thing to print money for a bailout, but when we talk about a bailout, you are fighting against a situation that would otherwise cause pain. So when we bail out GM 15 years ago, when we bail someone out and we pay those billions of dollars, the reason we're doing that is so they don't shut down and 100,000 people lose their job, which would cause a micro recession to those people.
I think the government bailed themselves out, Simos. When I think about it.
So we have been in a recession, an artificially put away recession called quantitative easing. Now we're doing the exact opposite of quantitative easing, which is literally propping up the interest rate to wrangle the value of money back down. To relate that into real estate, only because this conversation can escape us quickly. To put that back into real estate, I personally, for the Canadian market, and specifically for the GTA market, I speak with my confidence based on my conversations with both economists and industry leaders. And I do believe there is going to be a slowdown, but not in price. I do not believe prices are going to come down by more than 3 or 4% for the short term. And by the end of the year, instead of seeing a 25% year over year increase, I still stick to my prediction of 4 months ago at around 9 to 12%, more than likely in that 12% range. The reason I believe that to be true is because there is another factor that most people don't get exposed to, which is the cost of land, the municipal servicing, the development charges across all sectors. Land has reached absolute insanity prices. The governments are not greedier than ever, and they don't speak to this because they like to point the finger. They don't want to be the bad guy. But the government needs the money from the municipal levies, from the development charges, or else they're going to dysfunction. So they need those funds. But we're talking about for a condominium that costs you, let's call it $600,000-$700,000 in the GTA, almost 150 to 200 of that is not the developers. We're talking about a monster portion. We're not talking about 2%, 5%. We're talking almost 20%. That goes straight into government coffers over the cycle of the build out, over the cycle of the acquisition, between land transfer, between the waiting periods, between all the panels for the approvals, the LPATs, all the things. So people have to understand that even if prices wanted to go down, or else you're going to see a stall in construction, which is then artificially going to spike prices up due to lack of supply. This isn't an easy problem to fix. We like to blame people. We like to point the finger to Justin Trudeau, to the I'm not a fan of the guy. I'm going to just put that out there. But he doesn't have an easy problem to fix. He does not have an easy problem to fix, because between all these crazy pressures of inflation, of world wars, of all these things that are happening, the Russia-Ukraine war is not a gift to the world. Forget the human tragedy, which is insanity. If you want to just look at it as an investor or from a real estate or from an economy perspective, this is the disaster that we could not afford. And here it is on a silver platter. So there's a lot of forces happening. In tying it into real estate, we are still, like, as North America is concerned, because we have our neighbor from the U.S. Right down below me. We are still a stable. North America is the most stable place on earth, the most economically viable place on earth, the still most functioning and organized place on earth. So we are still going to be a destination for everybody who wants to go somewhere where those things can be afforded to them. And that is what's going to prop us up and keep us going. Just like this Greek didn't come here. Like my dad came here in the 70s. I came here in the mid 90s. And so like this whole panel is made up of that. We all came here for a reason. And the reason is that it's good. Period. So that is the long-term thinking that we need to have for real estate. Anybody looking to gamble and day trade in real estate is going to get really hurt right now.
Yeah. And you know what? I think this country was built on the backs of people that persevere, right? I think humans are resilient. I see business owners, and that's why I brought together this collective. And I knew you guys would be so good together, is I know how much you put blood, sweat, and tears into your own business and how you're genuinely trying to help your communities. I hope this educates people that are out there that there are good people trying to make a difference in this world. I think we're trying to overcome the beasts of burden in the industries and those monsters that don't care about the human capital, right? That only care about the profits. And you're just a line on an expense sheet. I've seen each of these individuals put themselves in front of their clients. We're going to go down to Ray. I want his thoughts on this as well. And then we're going to get into the ban on foreign buyers, the flipping tax, the auctions, the zoning planning. I'm going to go to Ray, then Mandy, to talk about how the ban on foreign buyers is maybe impacting people looking for mortgages. But Ray, we discussed this on the podcast the one day about overall corrections in markets. We talked about inflation. We talked about supply. You said something very insightful. I've repeated many times and credited you since then, saying, well, think about it. If there is a 20% correction, there's enough local investment money that is liquid that they're going to buy up those properties, and you're not likely going to see an overall drop 20%, which actually tracks with what Simos just said, right? That, you might see a 5%, but overall, if it's a longer term buy and hold, we still see it as a solid asset. What are your thoughts on that?
Yeah, I think, our generations that have kind of been around in the last, 20, 30 years are the only group of people in history that look at real estate as something that could go down in value. Until 2008, 9-ish, there was never a 10-year period in history in which real estate went down. Real estate has always been a hedge from everything that Simos was saying. Real estate, home is the hedge from all of that. It's the safest place you can put your money. And so I think it's folly for any buyers right now, or even sellers looking at the market saying, okay, we're going to do this when prices go down a little bit. Prices aren't going to go down. You're just going to have a decrease in the acceleration of home prices. I don't think you're going to see a decrease in home prices overall. And that's because it's always been a safe hedge. It's only when there was fraud in the market or too much risk in the lending that real estate crashed. And
you're in the States too. It was crazy down there, right? Like, I make $500,000 a year and I can buy that house. Like, they were doing
doc stated income loan,
right?
Yeah,
Bananas.
No doc, which means they didn't prove it. Stated income loans were a thing. But that was because the economy was rolling. It was so good and all that. Yeah. So, I think as people look at real estate, they should look at it as still a long-term favorable investment and hedge against all these things. But, is inflation bad or good? One of the things I've been thinking a lot about, because, I'm debating myself on this. When I was growing up, like, going skiing was a big deal. Like, going to the mountains and going skiing, like, that's what rich people did. And it wasn't just because my family was poor. We were like middle of the road, right? We weren't rich, we weren't poor, but we also couldn't afford those type of vacations. But if you've been skiing lately, you've seen, especially the people that have been there like, 20, 30 years, they're like, the ski bums that are still doing it. And they're like, oh man, this is the busiest we've ever been. There's lines like crazy. And so I think inflation is going to make things that used to be luxury purchases again. And I don't know that that's a bad thing. Will it limit the experience of some individuals that don't make as much money? Yeah. But it's always like those types of things have always been for those who can afford them. And I feel like right now it's like, I don't know someone who hasn't gone skiing in the last year or two. And that's like, when I was growing up, that was crazy. So I don't know how all this is going to impact, the overall purchasing power. I think it's going to limit some disposable income. It'll limit some people from making a home purchase because they're going to put their money towards something else. But it's not necessarily a bad thing in how it could put things back to how they used to be, and hopefully keep some of those mountains clear of people so I can go skiing again. No, that's not. But you see what I'm saying? Like, there's things that when I was growing up, like, those were luxury purchases. And, what y'all were talking about with the car sales, those have increased like crazy. And it's almost putting everything back in line with what it was in the 80s, which is kind of, I guess those were the Carter years, which hopefully we don't get that high, like the 14, 15% interest rates and such. But I feel like that's where we're going to.
Yeah, you know what? I'm going to roundtable this super quick before we go to ban on foreign home buyers, because that's a great point. I mean, we did this internally, and I always warn the team at Prime too. Like, it's not like the ATM machine is just printing up money. Like, the light switch can go off tomorrow. So I think it's thoughtful for everybody, buyers, consumers, agents, doesn't matter what you do, business owners, look at your P&L. We looked at all of our recurring expenses that we have and like, do we actually need these softwares, right? Like, is that $30 a month really being deployed into a proper place, or is it something that we can get less of and getting rid of things and doing things that are time vampires that aren't from my core passions or capabilities? I do think it's really changed the way humans are looking at the world and experiences and who they're collaborating with and how they're growing their businesses and how they're, pouring into their employees and setting them up for success. I think we can go into a better world if we all take the ball and run with it the right way. I do want to talk to, actually, I want to go to Phil if that's possible. And then we'll go to Mandy and then Lindsay to talk about the dynamics of how do you run an efficient P&L? How do you be conservative? But Phil, specifically, like, you do a lot of business advisory. You help people over and beyond just with the legal matters. So how are you helping people navigate the marketplace in terms of like running a more efficient P&L or being a little bit more cautious with their money?
well, the legal industry is not known for its innovation. Like, they're a bunch of old dinosaurs who want to still use yellow paper and red seals. So modernizing in that industry was quite an advantage. I think moving away from regional and national borders, we've seen a huge increase in foreign investment, setting up shop in the Caribbean, owning property there as a hedge, moving into crypto. Just from an investor perspective, for our businesses, obviously, it's hard for people to spend less than they earn. And as technology constantly produces more toys that are cheaper, people want to buy them. And I thought the one gentleman's point was very astute. 26-year-olds feel they need an F-150, a brand new one, right? In the past, you used to have to save for 12 years to put your down payment down. Now everybody wants everything right away in an Instagram demand. So that shift is happening, but it's just hard to forecast because I think international things are happening, like as Simeon said about Ukraine. Well, that's a boon for Alberta. Alberta is 5 years behind GTA in its real estate. I'm sitting in Lake Louise right now. You can buy a condo in Calgary for $340,000. That's a luxury condo looking at the mountains, right? Now that I think you're going to see a shift. So for your investors and your buyers, even if I was in GTA, I was telling somebody I'd sell my house in GTA, rent somewhere, and buy something out in Alberta right now. Like, if you don't take your money out of a market at some point, you never see the capital. You're just constantly just more in debt with a more expensive house, thinking you're rich. But if it crashes, you're not.
You don't lose money. If you don't sell, you also don't make money. If you don't sell, Lindsay, you almost sold a duplex that you would have lost a lot of money on a couple of years ago. What are your thoughts in terms of, managing your income and expenses and where to deploy capital, and how are you advising your investor clients?
Yeah, I think it goes back to what everyone has said. It's being very conservative in your numbers, but also not limiting that from keeping to purchase and keeping to invest. But it's shifting strategies. It's making sure that you're investing where it does make sense. So as Phil just said, that market in Calgary, Edmonton, everything out in Alberta makes a little bit more sense cash flow wise. So maybe shifting strategies to somewhere like that, or looking at where the numbers make sense. So when we're looking at larger multifamily properties, we need to make sure that there is cash flow in the short term just to hold onto the property, or you have strategies as to how you're going to increase those numbers. So entering into something without a strategy, without a plan A, B, and C, especially in such a hot market, is just setting yourself up for disaster. If you're setting yourself up for success and you have all of those plans in place, then it's always a good time to buy. We can, if we're looking at an opportunity that makes sense independent of the market, then that's when we tell people to buy. So I think that it's important to look at numbers conservatively, but also not limit that to moving forward.
Okay, awesome. Let's go to Mandy in terms of how do you plan, right? Because your whole world is planning, and then we'll go to Heddle to kick off the ban on foreign home buyers. So Mandy, how do you plan?
Yeah, so I'll kind of like what Phil said. He's sitting in Lake Louise right now and could potentially sell his condo in London or the GTA area. And then kind of what Lindsay said is, it has to make sense when you're investing. So on our end, when someone's investing a rental property, we have to do a rental worksheet and make sure that there's even a surplus that's being generated on that rental. The banks need to see that. So it's a legal component that we have to do, and we're doing an approval. And really, at the end of the day, our job as mortgage brokers is we're taking everyone's expenses, including heat and bills and their F-150 debts, and trying to see if they qualify. And then I just kind of want to go back to our initial conversations with interest rates. What people are forgetting is that when they qualify for a mortgage, they're not qualifying at what the rate was 6 months ago at 2%. We have to qualify them at the qualifying benchmark rate of 5.25%. So if rates were to, heaven forbid, go up to that, they still qualify and can carry that mortgage, unless, of course, they went and racked up a bunch of debt or lost their job. But Justin, our job really, we have to strategically plan out and take a peek at everyone's debts and make sure that they even qualify to get into the market. You can't get a mortgage without that. So yeah, we analyze their credit, we analyze their income coming in, the cash flow, and then we get them a mortgage. So I wanted to just one last thing too, sure, guys. All this panic about interest rates going up, it's a very healthy increase. And we're still the prime rate of Canada is still at a historical all-time low. It is so cheap to borrow money, and variable is still the way to go. So our business district managers up in GTA and the Vancouver area are still urging everyone to stick to variable. It would take 6 massive increases for us to be where we are at fixed. So if you've got clients or anyone that's panicking about locking in and getting into a fix, do not do that, especially if they want to break their mortgage early and invest and sell their condo in Toronto and move out to Lake Louise. And we are seeing a lot of that, Phil. I've got clients that are buying up in Sault Ste. Marie now on Lake Superior for $300,000. That's where my family's from. And then they're buying property in Costa Rica. So they're dividing their time, especially with all of this remote work ability.
Well, it's Florida, Aruba, you're seeing all kinds of stuff out in Alberta. I'm sending out referrals. If you're looking for referrals, just send me an email. I've got amazing agents all across North America where they're looking at, well, I don't have to live where I necessarily work anymore. The dynamics of everything's changed. You touch on a couple key points. One, if you're going to get a mortgage application, you're going to get asked for 1 million documents in Canada. That's just the reality of it. It is very invasive, but it is what it is. And that's a big difference to how it operated in the States, that we were qualifying 2% higher than the mortgage rate we were actually getting, even up until now. So as the rate increases happen, that's a very insightful comment that I want to point out, that you said, make sure you're talking to your mortgage experts about, do I go variable or do I go fixed? Because I even had that discussion with Shannon. We'd never make a decision without talking to our experts in terms of what we're going to do down the road, because these conversations tend to happen and people definitely get emotional in real estate. We've got about 15 minutes left here. I want to get through the ban on foreign buyers, flipping tax, auctions, zoning planning. Very important topics. These are the liberal keynote, like high level. This is how we're going to fix the housing supply issue. And I know, let's roundtable. Anybody can jump in and kind of put their hand up, and I'll call on you. I'm going to go to Heddle first, and then I actually want to go to Jazz if he comes. Yeah, Jazz is there, and discuss the foreign buyers, because they did this in Vancouver a couple of years ago, where they instituted a large increase on taxes for people investing in Vancouver, because everybody just sees all these houses and they're like, they're just foreign investors, they're vacant, they're speculating. And there is speculation that happens, but they discovered in Vancouver that it was only like 3 to 5% of the market that was actually foreign investment. And then after about 4 months, it came down 5% and then stabilized. It went right back up because it wasn't the actual needle mover that they thought it was going to be. So do you think the ban on foreign buyers, Mike, is going to move the needle? And for clarity, they're talking about banning foreign buyers from buying recreational properties. They can still buy primary residences if they're coming to live here. But what are your thoughts on the ban on foreign home buyers? And then we'll go to Jazz.
Yeah, you touched on a few points. It was a couple of years ago that this gained a lot of traction. Started in Vancouver, made its way to Toronto, and Jazz, you'll probably know the stats in Toronto, but I think Lepgae had put out their study was like 3.7%, or it was certainly less than 5% of purchasers was foreign investment. So to see a 2-year ban, unless they're a resident that will be applying for residency, I believe they get a rebate. It's certainly interesting. I don't know that that's going to move the needle much. I find it interesting. We just talked about being able to purchase in Costa Rica, or we have a lot of snowbirds. I can only imagine the pushback we might receive if the U.S. put a ban on snowbirds purchasing down there. So, unfortunately, in my opinion, I don't think it's going to move the needle much. I think it's probably more an optics. That the perception is that there's a number of competing with Chinese money, Chinese investors. I'll touch quickly on another interesting point, because I think everyone's going to add some great value as we get into auctioning. And I represent Hamilton, so I can only speak to that market. It wasn't until recently that we saw multiple offers, 15, 20 offers on the table. And we found a cluster of offers. So if I had 20 offers on a property, it would be like a dartboard. 80% of the offers would be bullseye. They'd be center around market value. And you might get 1 or 2 outliers at the top and 1 or 2 outliers at the bottom. And of course, as a seller would accept that outlier, or what I might call an irrational buyer. They'd been outbid, they'd received buyer fatigue. I believe we're going to see a little bit of a pullback in pricing. CMOS, you always add a ton of value. You said 5-ish%. I think you're probably in line with what I would agree. I think it might be that difference of the irrational buyer versus the cluster of purchasers as we go into this open form of bidding process that's going to be piloted in select markets. So we'll see how that rolls out.
Mm-hmm.
I don't know that that's the solution either, because I've had many clients been outbid in a bidding war process that once they see the posted price have turned to me and said, boy, I would have paid more than that if I'd known that was the price. So I don't believe that's our solution. It will be interesting to see how this is all rolled out.
There's some dynamics with the auction that I definitely want to talk about, because if it's not a forced auction across the board, it's really going to change things a lot. And also, like, if I was buying a piece of land that I absolutely wanted, there may not be a cap in what I would pay because of the opportunity cost. Did you put your hand up, Simeon?
I'll comment just on that.
I just wanted to add a quick thing to what Mike was saying. The reason that 5% quick dip, and now we're talking really, really temporary stuff, and this is an educated guess based on just the cost of money change. So the only reason you're going to see a small tick down, but by the end of the year I think it's going to smooth out, is because the way people react to change. So if something changes, so if I'm on my motorcycle and all of a sudden it's sunny and all of a sudden I see a dark cloud and I start getting wet, I freak out. Wasn't prepared for this. Wasn't ready for this. I don't like it. So you make decisions quickly and not always the right ones. So the general population is going to catch your breath. You're going to have a bunch of sellers trying to sell all at the same time.
Yeah.
Oh my God, it's changing. I should have done it this 6 months ago. But within 2-3 months, we see people accept the facts. People get into the rhythm, the new rhythm, whatever that rhythm may be.
And keep in mind, we were going 200 miles per hour on that bike, right? And now we're going to start going 150 miles per hour. You're still going very, very fast, right? That's the market. It went up to 23% in the GTA. If it drops down to 17.3%, we're still doing very well. But if you look at the last 40 years, you're at a little over 7.3, 7.4% year over year, right? So that little dip. But Justin, if I can just quickly touch on the foreign buyer stuff, because we got a lot of numbers around that here in the GTA.
Yeah. We'll do that. We'll go to Heddle, and then I want a little bit of insight from Phil on human analytics and how people tend to react to situations like that. But go ahead with the foreign buyer piece.
I apologize. I have to bow out. I have a hard stop. There's construction crews en route to my house. Have a blessed morning. Love
you, buddy. Thanks for coming.
Take care, brother.
Great conversation. God bless all of you.
Take care, brother.
See you, most.
In terms of the foreign buyers, like I don't think that's going to move the needle at all, specifically, again, in the greater Toronto area, because, you know, if you drive by a sales office when a new construction is happening and you hear people speak Punjabi, my native tongue, you hear people speak Chinese, you hear people speak Greek, you hear people speak Jamaican, everyone thinks that they're these foreign buyers, but they're from Brampton, Markham, the Danforth. You know, they're from Eglinton, right? And so, I mean, the fact that I think the real number is probably less than 2%, Mike, to your point. I know Royal LePage came out with that 3.7. We looked at the last 10,000 transactions that we've done in our career. 5 of them were with actual foreign buyers. Like, there's just very little foreign money coming into the GTA. And if it's even as high as 5%, I mean, because we just took our numbers, but if we look at it going to 5% right across the Toronto Real Estate Board, which happens to be North America's biggest board, so I think the sample size is big there. I mean, we're talking about 5,000 sales. On a good year, we do on average about 100,000 sales. You're talking about 5,000 sales. That would be absorbed just on this panel's clients. You know what I mean? And so I just don't think that's going to make a big enough change. And to Mike's point, I mean, I just bought a property in Florida myself. I'm concerned what Biden or the next guy or gal might do to us, because we have a lot of clients that are looking in Florida specifically. And so it's going to be interesting to see, but moving the needle here in terms of value. And this is coming from someone that does want housing to be affordable for everyone. I mean, waving a magic wand, if everything was perfect, that's exactly how things would work out. But I just don't think that specific measure is gonna move the needle at all.
Well, if you listen to your TikTok and Twitter comments, you would think that you don't want housing prices to go down, right? Obviously.
Well, yeah, look, I want it to become affordable, but I'm also a realist, right? I mean, I don't think people should, if you look across the major cities in the world, not everyone is able to afford a condo in that urban city, right? I.e. downtown Toronto, London, Paris. We become a renter city, and that's normal. And that's just how it is. You got to drive till you qualify now.
Well, the first house that I lived in was $88,000 and was not the prettiest house you've ever imagined, right? And I think the dynamics of what people are buying are shifting dramatically, and maybe they're not buying a 2,000 square foot single detached home in a great neighborhood. They're having to buy 2 or 3 times to get to the place that they want to be. And I mean, that's the trajectory that a lot of investors have taken over the years. It's just an interesting dynamic. Mike, did you have something you wanted to add previously when Simeon was talking?
I don't remember. It was just to enforce his point. But as I've got the mic for 30 seconds here, because I'm going to step out in a moment. If you look at price affordability on a global scale, how affordable is housing in Canada or Toronto or Canada's major epicenters on an income to price ratio? It's still very affordable. You've got cities like Rome and Sydney, actually, the big 3 in Australia, all outprice Canadian housing from an income to price ratio. And then Paris, and as you go through the list, real estate is still very affordable, despite what we're feeling and haven't been in the market on a global scale, which again remains to support all of our point in that I don't think we're going to see a big decline in values. I think we may see some pulling back, but I still believe that real estate is a great investment, even if it serves the fundamental need of housing and putting shelter over your head. So
I appreciate that. I just dropped your link in the chat. Everybody go give Mike a follow. I'll have him back on the podcast. All of these people that you see are going to be repeat guests on our masterminds and my podcast because they're very insightful, and appreciate your time, Mike. So go do what you have to do. Anybody else that has to drop off, by all means, let us know. We'll keep rolling until we get through some of these topics. Phil, you're a human analyst, right? Like, you really do look at the way people behave. Obviously, when you're in a court of law, I've seen your war room. I know how you guys operate. It's fascinating. But the dynamic of also being a soccer coach, when little kids are playing and the ball gets kicked out and the whole pack runs over there and acts emotionally, the conversation we just had about the rain coming and freaking out, where do you see people making mistakes when it comes to emotional reactions or decisions? Doesn't have to be specifically real estate focused, just that general human principle.
There's a lot going on this show, but just to go back to Dalio, just in terms of being the kind of risk guy, there are things that happen in generations that people haven't seen before. And so they talk about what they've seen in 10, 20 years, but there are events that happen. And one of my concerns is with all of the printing of money and the advent of cryptocurrency, we could be moving to a generational event. And especially as Simeon and these guys were talking about government supporting it, it put into my head the picture of how government stopped forest fires. Because every 5 years there'd be a small fire that would burn away the underbrush. But when government stopped forest fires, and then you had these giant underbrush, then when you had one, it burned, you have these giant wildfires you can't stop. And I wonder if we're moving towards that a little bit by constantly supporting a market, printing more money. At some point, we're going to get to that major fire. That's my concern. But I think Canada and the United States are, they're attracting capital from the rest of the world. Right. And so that's going to keep us going for a while. But, COVID has allowed us to move more into the suburbs in cheaper land and still work in the cities. So I think our country is in a really good spot, but I have no idea where we're going.
Yeah. Ed Hooks Jr. on LinkedIn said less government equals more fun. If the U.S. outlawed foreign investments, California would have crashed, and now citizens outbound migration to other states. And it's interesting that you said that, Phil. I'm going to go to Ray next because you mentioned Web 3.0, crypto, and the dynamics of like the market forces, right? Despite, the government, they're managers. They're not creators, right? They don't create anything. They manage things, and they put themselves between the creators and essentially the economy. And we see Web 3.0, cryptocurrencies finding their way into the advent of real estate, and in a very, very big way. And, market forces wise in Web 3.0, high level, Ray, and then we'll get into the auction.
First, one comment on the foreign investment thing. I'm offended that he doesn't want my investment, so I'm going to pull back my purchases of maple syrup and watching hockey. So, y'all made some incredible points, but one of them, you're talking about what the government is doing in relation to what actually has to happen. And this is happening in the US as well. It seems like the government is looking at buyers saying, poor buyers, let's help you buy. Let's give you a credit. Let's figure out how how to make it to where you can buy easier and compete in this market. Let's change the rules on how homes are bought so that more buyers have an opportunity. But what they're not doing is focusing on the sellers and the builders. They're not focusing on the problems that those folks are facing that is creating the limited supply. And if they could work on maybe putting some incentives towards labor, maybe putting some kind of incentives or helping to take over the supply chain of lumber and materials, those things, land is always going to go up because there's more people and there's the same amount of land, except in Dubai. Otherwise, land is always going to go up, right? So when land is going to continue to increase, the other two forces, the labor and materials, are things that the government could actually come in and say, let's figure out how to incentivize more people learning these trades and skills. Let's figure out how to incentivize the producers to produce more of these goods. What can we do? How can we get more lumber? How can we? And so if the government is not looking at those solutions, but they're only looking at the solutions for buyers, they're actually exacerbating the problem because they're putting more pressure on the sellers. They're putting more pressure into the market. So they either need to step back and let the market do what it's going to do, or they need to figure out a way to help the big, evil, greedy sellers and big, evil, greedy builders. I mean, they're not really big, evil, and greedy, but that's the perception that everyone thinks. But as soon as they do that, the optics from the other side are going to be, oh, these people are trying to help all the people with all the money that are limiting home supply. And that's the problem with politics inside of this market, is that we all want to help the buyer, but in order to help the buyer, we got to fix the supply problem. And in order to fix the supply problem, there could be some great government intervention, and there could be some great trades made. U.S. actually gets a ton of our lumber from Canada. So there could be some things done between our countries and others to decrease the amount of pressure on supply. And if they don't do that, then I don't think they're actually serious about the problem. They're just trying to get people to vote for them.
I like how they're like, we're all in this together, except for you, and you, right? I use an equation just like they're talking about or Airbnb taxation of people that have bought recreational properties and Airbnb in them in our area. And I had a discussion with the mayor. I'm like, here's a solution. Rather than playing the blame game and saying, this person is just making money and we should just tax them and don't tax the tenant, tax the owner. I'm like, no, here's the four people involved. You as a municipality, the people calling and filing the complaint, the guy that owns the property, and the tenant. So let's do this. Put $1,000 fine in place for the tenant if they make a noise complaint. Put $1,000 fine in place for the owner if the tenant makes a noise complaint. So now the owner is going to leave a letter and say, hey, you make a noise complaint in your contract, you're going to pay me half of my noise complaint. So the tenant's going to get a $1,500 fine if they act up in the area. If it gets fined, that money goes to the municipality. Be transparent about where the money goes. Hire more bylaw officers, do a better job. But also put $1,000 fine if somebody's making a frivolous complaint on a property where there's not actually a noise complaint. Now, all four people that are involved in the transaction have culpability and are in it together. Same thing. Buyers, sellers, the market. Let's look at everything and make everybody culpable. Government, show me where the money's going. Buyers, here's how we're going to make it easier and more transparent. So shady real estate agents that do exist cannot operate in the shadows. And we're going to help the sellers that are having massive stress on finding labor. And they're not just running around with bags of cash. There are some phenomenal builders and developers out there that are literally bleeding and just putting their heart and souls into projects to get them to where they need to be to give people homes. But there's also bad ones. So the more light you shine on the problem and the more you actually get everybody in it together versus vilifying a specific group, the better off I think we'll all be. Phil, you got something?
Just for like the foreign investment point, government's not smart and most analysts aren't smart. There's a shit ton of foreign investment going on. It's just not they're walking up with a China symbol on their jacket and calling a real estate agent saying, I want to buy it. They're buying it through their friend who already has a property so they could take advantage of our lending rights, right? Like, so, and if money is coming in, it's coming into investment funds they're going to Bennett Jones and spending $1 million to create a structure to put the money in. In Vancouver, the house purchases, they were being bought by families. Certain individuals were buying 5 houses in Vancouver, but it was foreign investor money buying the house that was transferred later, right? So the government's not going to be able to stop it. Money is pouring into this country, and then we need labor. So if we increase immigration, we bring tons of labor, and what does that do for inflation? right? Like it's a hard cycle for us to figure out where we're going. I think people need to figure out where they want to live in a happy environment, get in there, and then be dynamic in their investing. But the politics. There's a thing. I keep forgetting the bearded gentleman's name with the wonderful voice.
Ray Allen.
There's a great book you'd love called by Jane Jacobs about cities, and she wrote about Manhattan. And it's a fabulous book on how she stopped the freeway, and developers wanted a freeway. But there's a theory that every time you expand the traffic capability, it doesn't ease traffic. You just get more traffic because more people drive. So when you're kind of looking for policies, you have to think differently. If you just allow for more people will just go there. How do you create a balanced policy that creates quality of living and allows for sustainable growth? That's my question.
Yeah, I love the insight. We're just getting a little bit over time, so we're going to go through auctions and zoning planning super quick here. I think it touches on to what you said. My thoughts on auctions, so just high level for people watching. Government is talking about ending blind bidding and putting an auction in place. From what I understand of what I've seen of the policy so far, it's an option. I don't know a seller on the planet that is going to option for an auction versus blind bidding in this current market. The other problem is that's regulated for MLS and organized real estate. There's a lot of transactions that happen, off-market deals. You have wholesalers that are running rampant in our market, sending out letters saying, I will have a buyer for your house, tying up properties, reselling it to other people for a profit, taking advantage of little old ladies and all kinds of crazy stuff happening. I think there's going to be a very, very difficult time for the government to manage what that even looks like. But I think personally they're putting it in place because they're trying to win votes. I just don't see it really being implemented in a tactile way unless they completely get rid of organized real estate as a whole and private transactions get regulated as well. Phil, how do you think the government would impose something like that? And what are your thoughts on real estate auctions?
The free market guy in me likes them. It takes away some power from some of the brokers, but I just think you end up getting the right price as opposed to kind of a guessing price.
As a buyer, you get the right price?
As a buyer and a seller, right? Like there's this pure visibility on what's going on. So everybody can go to as high as they need to go rather than kind of throwing in a guess. And then in the end, the seller might not get what they could have got. I know that there's some private individuals I've heard of that are actually thinking about coming in and competing with the broker market by trying to get licenses to do it outside of the real estate agents too. So I think either for some of you guys, you got to get into the trend, or somebody is going to come and do it themselves.
Well, just to be clear, if they instituted it across the board, I win. Right? Because we've built a huge marketing machine too. We get 5 to 10 times the amount of leads and visibility as MLS through our marketing. So it puts us in a position where as a seller, I'm more valuable to you because, hey, if that's regulated and it's going to be how many eyeballs and how many buyers do I get to the auction, you're going to hire me all day long because I'm going to get you more eyeballs than anybody else. Right? I think
it's good for good realtors, I think.
Yeah. It's bad for bad realtors for sure. The implementation I think is interesting. I'd love Ray's opinion and then Mandy from the mortgage perspective, and then we'll go to Lindsay.
So you really have to think of what is capitalism, does it function well on secrets? And does it function well on secret pricing? And, I don't know that it does or ever was intended to. And whenever you don't have any kind of open offers platform and you're just asking someone, a buyer, say, hey, make your best offer, they're pretty much just going to give you all their money if they're desperate. And that's not necessarily good for the market, because that's not an actual price. That's just what money they have. And so personally, I just tried an open offers platform here locally, literally 2 weeks ago. And we took a property live on it. It went about 25% above value, and everyone could see what the other person was offering. And all of the agents that put in offers appreciated the transparency of seeing exactly why they were beat. And the way, I used a product that I'm testing actually. And there's seller terms. So they have the list of, here's all the terms that the seller has. Here's what they need. And then there are, the agents would agree to those terms and say, yes, we agree to those and here's our price. And so the only thing left for them to argue about or look at was price. And it simplified the process. The winner was like elated. He was like, oh, this was so much fun. You know, they had a good time through the process. So I think there's a way to do it in which it works well for the consumers on both sides of the transaction. It allows transparency for the real estate agents involved. And I think there's far fewer lawsuits moving forward. I mean, y'all have something in Canada that we don't do. Once y'all go under contract, you actually tell people, here's what we went under contract for.
Yeah.
We don't do that.
Not until you
it's
close,
a mystery
right?
here.
Yeah. Yeah, it's weird because like technically properties don't close all the time. So the fact that we post our sold pricing because we use it for comparables, Mandy, I think it would actually solve issues on the appraiser side because appraisers don't even know what to do. If it was open offers and you were able to look at all of the offers and how they came in, it'd give the appraisers a lot more confidence in saying, yeah, I do think that this property is worth X dollars because there were 20 people in line that would have paid within, a 3% range of that price, right?
Oh, fair enough. I mean, Justin, you know this. We try and always call the appraisers prior to the clients putting in a firm offer at $200,000 over asking to make sure that it's going to even appraise at that price. I guess I'm a little bit uneducated in terms of this whole auction talk. I've heard about it. I'm on the fence with it. I love the idea, back to what you said, Justin, there's a piece of land and you find there's value in it. You want to know what the price is. You want to know how high you can go for. And if I like the land as well, I want to try and outbid you because that land's going to serve a purpose for myself and my family and whatever I'd like to do with it. So it's 50-50. It's really tough to say how it's going to work. I think people are going to get really excited if this does happen because they feel like they're going to stand a chance and they're going to see offers and be able to outbid them if they can, or they're eliminated from the game because they don't qualify to purchase that home at that price. But again, I'm just feeling a little on the fence with everything because I don't know enough about it as of now.
How is it going to get rolled out? Well, I know the Ministry of Housing is watching this podcast, so just make sure that you roll it out in an effective way and you get a panel of people that bring it forth ethically and implement it and don't just fall forward into trying to implement it to the marketplace. It could be a great thing. And I'm all about free markets, right? And I think, an easier market for people to navigate. We don't like the pressures of the marketplace as realtors. People think we love it and we're just making money hand over fist. A lot of times it's like the effort we're putting into deals now, you're writing 5 times the amount of deals you were in a balanced market to get the same amount of transactions done. So the dynamics, I think, again, if we truly want to be in it together, we have to be in it together. Lindsay, what are your thoughts on the auction platform? And then we'll jump into planning and wrap this up.
Yeah, I'm all about transparency. I think it's easier to work with clients when all that information is out there. So I think it makes our job even easier when the consumer is educated. So I think if it gets implemented in the right way, it's a great strategy. At this point, I do feel like it's just a talking point. Going back to that point, foreign buyers ban as well, another talking point, right? They have banned people from the market that don't vote in Canada. So at this point, I think it's a talking point, but we'll see how it rolls out.
And Lindsay, just on that note too, and I wanted to ask this to Phil a little bit earlier, but and I'm not sure if it's been passed, but what about the higher taxes for people who buy a home and sell it within a year and earn $200,000, for example? Phil, what are your, and I know we don't have time to get into this topic, but just another thing to add to the table with all these changes.
I don't know if I can speak to the tax implications in case somebody relies on them and I'm wrong. So, I think creative solutions with good counsel are going to be on the increase. Whenever government puts these things in, people who want to do these things find ways around them. But I think people should definitely speak to a lawyer before they make these purchases because there's a lot of risk. Things are moving so fast, and usually they only speak to the lawyer after the deals have gone firm. Right. And when you're doing something that involves this much risk, no inspections, closing on deals, and, somebody has to understand what their long-term goal is and give them a risk exposure. So, that would be my advice is invest a few $100 in a conversation before the offer goes in.
Yeah, I think working with your power team early on, making sure you're not just working with Uncle Jimmy, the lawyer who doesn't actually do real estate transactions, and working with a lender and communicating with them when you're putting offers. That's where deals go sideways, is when the team's not working together. Like, I know I can call Phil and say, hey, what do you think about this? and just get a high level perspective on it. And he's privy to it. So if the client calls him, he's already up to speed as to what's happening on my end. All those dynamics are super helpful. If anybody's in the chat, there's a lot of people here and want to ask any specific questions on taxation, any of those things, feel free to connect with any of the speakers. I know there were a couple questions in the chat. We'll try and jump in after the stream and get to them. The last question, or the last major topic that we had, was around zoning planning. We talked about the inefficiencies of supply chain issues. And I think the major issue that I see is, like, when I see planning offices, so building divisions and planning offices, and a document goes to this person, takes 3 months to get to this person's desk, for them to call them and say, no, you need to talk to this person. And then they tell them to call this person. They bring it back to their person's desk. You're talking about projects that are taking 10 years to get to market, that if they fit the official plan in density and growth, they should be taking, 3 to 5 years, not just open development and, let them do whatever they want, wherever they want. You want smart development. That Jane Jacobs book, I'm pumped to hear and read that one too, because I love thoughtful development. But we'll go back to Phil, and then we'll do Lindsay, we'll do Mandy and Ray. So Phil, what are your thoughts on the zoning planning, the billions of dollars Canadian government is talking about putting into making planning offices more efficient?
The problem we face in Canada is abundance. The city of London, Ontario has the same square footage of the city of London, England, right? And so you look at just how we waste farmland, because, and this is where developers, we have to be held accountable also, because they want to make money as quickly as possible. I personally support the intensification movement, which puts more population in smaller areas. So you create communities, not these sprawls of suburbs that can't be facilitated by public transport. But in Calgary, especially if you drive around Calgary, there's so much flat land. It looks like somebody threw up on the prairies. Like, it's just, there's no intelligence to it. So the problem I have is that with governments that are only thinking in 2-year cycles, you can't build a 20-year plan that says what's good for our society in 20 years, because you're not going to get elected if you do what's good for society in 20 years, a year from now. So, that's the struggle we face. Municipalities have to take greater control and show their personality through, like, dynamic municipal government. I think that's where you'll see a diversification and a differentiation.
Well, I think leadership and planning need to be separated, right? I think having local politicians voting down projects to satisfy voter bases, when in reality, it's not the best thing for the overall plan for the city. That's where the dynamic needs to change. Lindsay, your thoughts?
I think this one, out of anything, is the only one that I think will really make a difference if done right. I think that it actually addresses the actual issue in all this. As Ray had mentioned before, supply and demand will always dictate the price. So out of everything here, I think that this, if done right, would actually affect that supply. So that's my thoughts on it.
I appreciate that. Mandy?
Agreed with Phil and Lindsay. It's, the federal housing plan has allotted $70 billion for a 10-year plan. It's, hopefully not going to turn into a 2-year plan, like Phil just mentioned. I think it's a great strategy. And, the other thing that I just wanted to touch on quickly is the government has also put into place just a few different products, and one being the tax-free savings account for the first-time home buyers, where they're allowing them to save up to $40,000 for a down payment, because most first-time home buyers don't even have the ability to save that type of money. So with that in place and, affordable housing, hopefully we will see some positive impacts and changes.
And Ray, your thoughts about, I don't know how planning operates in Arkansas, but I'd love your thoughts on it.
Yeah. So anytime a government says, we're going to put billions of dollars towards this problem so it becomes more efficient, it seems to not make sense. I think there's a lot of ways to make it efficient, but just in general governance, you have to decide if the government is going to lead the people, or if they're going to guide the people. And if they guide the people, then that means the people should be the ones looking at this stuff and making the decisions, which is ultimately way more efficient than the government getting involved in the first place. If they're going to lead the people, then they're going to be telling you what to do and where. And it's just a different mindset. And whenever they come in and spend billions of dollars and tell you what to do and where, generally there's going to be lots of toes that get stepped on. There's going to be lots of people that are unhappy. There's going to be lots of changes that they're going to have to take into account for whatever special interest groups. So I know that it can be more efficient. I mean, we know that the whole home purchase process can be more efficient. And the thing that usually gums it up is the government paperwork and stuff involved. I mean, I think we would have moved to electronic closings. I don't know if y'all do that in Canada, but we would have moved to electronic closings a lot sooner had it not been for all the red tape and the government loans and things like that, and different requirements of all those loans that the title companies and lenders have to follow. So I think in large part, getting out of the way is what usually creates the efficiency in the marketplace. So whenever you have the government saying, I'm going to put billions of dollars into this problem to make it efficient, it just doesn't make sense to me.
Well, here's a last high level thought I have in terms of my opinion on it. I think exactly what you said, Ray. Like when I see healthcare and I see education and I see real estate and I see the restaurant business and I see government regulation, I see a lot of waste. And I know people that work in those industries and I see a lot of inefficiencies. And again, I don't think there's great people that work in government and there's bad people that work in government. There's great people that work in real estate. There's bad people that work in real estate. I think as a collective, if we can really look at the state of the world today, and I think this will sum up the conversation of, we've been through a rapid pace of growth. We have been going 200 miles an hour, but if we drop to 150, what can we do to be more efficient in our own households? What junk do I have behind me that I can actually get rid of and sell and then invest that capital in something that may create one more job, right? I think if the government and the leadership can start thinking that way, I think if the people that are in the offices can start thinking that way, the people that own businesses and the people that are trying to do good work, then we can really look at this as a huge positive opportunity. We can look at it as a true global village. We can start taking down borders. We can start collaborating in a bigger way that we have. I think that really sums up this conversation. We have people from all walks of life, all across North America, and different opinions. So I definitely want to thank you all for being here. We had a ton of people on the actual stream. So hit that subscription notification button, drop comments, go to Instagram and connect with all of these individual speakers. Follow them, follow Ray's show, connect with Millar's Law. They are putting out amazing content, especially on LinkedIn. I think their LinkedIn platform is fire, and they do some really cool stuff across North America. Mortgage Mandy, Lindsay, thank you for being with us, everybody. And we'll catch you all on the next episode. So go enjoy your Saturday and happy Easter weekend, everybody.
Thank you.
All right. See you guys. Bye.
Bye, everybody.